Hi there folks, my name is Sean Shaughnessy. I am the Chief Investment Officer of MDKS Development Company and Creative Real Estate Wealth Management. I'm here today to try and dispel a myth that so many naysayers and poo-pooers out there have been trying to throw at our industry for years and years and years. And the fact of the matter is that they keep on saying that you just simply can't buy any real estate at all without any of your own money. The fact of the matter of the case is that they are 100% completely and totally wrong. But let's get to the real point that they're trying to make. They're trying to make the point that they can't buy real estate without money, and that is absolutely correct. The fact of the matter, folks, is that if you want to have something of value, you have to exchange something of equal or greater value in order to get it. There is no way around that. So, is it true that you must have money in order to buy real estate? Yes. The question that begs to be asked, however, is whose money does it have to be? Does it have to be your money? No, it doesn't have to be your money, but you can still own the real estate. Let me explain why. I want to give you an example here. Okay, I've got investor A. He's creative, and he is going to go ahead and he's going to look at a property for $50,000, and he's going to come up with some solutions to where he can obtain that property without putting any of his own money down. And we can explain some of those in some other videos coming forward. And then we have investor B. And investor B decides he's going to go the Dave Ramsey route, and he's going to take that $50,000 and he's going to put $50,000 down to buy the property. In essence, they want 50 grand, he pays 50 grand. The property then appreciates to $25,000. Who has made more money? Was it investor A that put none of his own money down except for perhaps some smaller costs like carrying costs on a loan or something like that? Or investor B, like our Mr. Ramsey fan, that decided to put 100% of the money down on the property? Well, the fact of the matter is that the person that put zero money down made a heck of a lot better return on their money than the guy that put 100% of their money down. So, with that being said, we need to ask ourselves a question: does it make sense to always use our own money? Well, of course it makes sense at some times and in some places to always use our own money. But more often than not, innovative financial and real estate entrepreneurs are always going to look for ways of using other people's money in order to accomplish what they want to do. It's called leverage. If I can go ahead and if I can take a longer stick to move a heavier object, I'm going to do it. So if I can go ahead, if I can take $10 and leverage $100 with that $10, I'm going to do it. That's what it's all about. That's why people start to poo-poo when they say, "Oh, you need to have money in order to buy real estate." Yeah, you need to have money, but you need to make sure that it's not necessarily your money. And you don't necessarily need to go to the bank in order to get this money. Okay, that's a fallacy that just is completely and totally beyond comprehension to me. The matter of fact, folks, very rarely do the best deals ever rest behind the banker's desk. There are smaller banks, community banks, credit unions, etc., banks that do what are called portfolio loans. Those are banks that are occasionally very useful and very valuable for your real estate endeavors. And I encourage you to develop and nurture those relationships with those loan officers and those bankers and those bank presidents, etc. But the fact of the matter is that there are a heck of a lot of other ways to do it. Let's talk about private money lenders. Who is a private money lender? Well, your grandma could be a private money lender. The guy down the street could be a private money lender. The guy that's getting ready to retire could be a private money lender. More or less anybody that is looking to make a better rate of return on their money than, say, what they would get inside of the stock or the bond or the CD or the fixed annuity market or whatever the case may be. Especially those folks that are inside this fixed annuities and CDs. There are a lot of people out there that they want the safety and they want the security of a bank guarantee, government bank guarantee, or an insurance company guarantee behind their money. And I can understand that. With that being said, though, real estate is a very nice second to that type of guarantee. If you borrow money from somebody and you give them a security interest in that property, if you default on the loan, guess what? The property becomes theirs. And therefore their money is secured as far as the value is concerned. Now, they may have to turn around and sell the property, obviously, and that could be a hassle for them, but that's a risk that they're taking in order to obtain a better rate of return. You see, when you go down to the bank right now and you open up that 2-year CD with your $100,000, they're going to give you about 1, maybe 2% tops if you're lucky. Well, let's figure in the taxes on that. If you're a regular old Joe, 15% tax bracket, well, you can already subtract out a considerable amount of the income that you've received for the of interest income to the taxes. And then you also have to think about the cost of living. Cost of living in America right now is running at about 2 to 2.5%. So if I'm getting 1.5% on a CD and I'm paying taxes and cost of living increases on my money, I'm actually losing money by putting money into the bank. If I go to myself, for example, to Sean, and I loan him $100,000 to go do a real estate project, and Sean offers me 10% of my money, simple interest, for as long as I use it, and then returns it to me, I just made 10% of my money, and it was guaranteed by real estate. And yes, something could have gone wrong, and Sean could default, and I might have to take the property back and sell it, but at the very least, I'm more than likely going to get some, if not all, of my money back. And that is the trade-off between getting a much better rate of return on your money with a greater degree of safety than, say, the stock market or the bond market, where nothing is, there's no guarantee of getting anything back, versus going to the bank and getting something that actually, when you figure in taxes and the cost of living, actually loses you money. You also want to look for distressed situations. And when I mean distressed, I'm not necessarily talking about distressed homes. Distressed homes, that's a given. You walk up, you knock on the door, you say, hey, you know, I just wanted to see, are you at all interested in selling this house? If you are, you've got yourself probably a distressed seller, somebody that is interested in different ways of selling that property to you and is willing to work creatively with you in order to get you into it. And we can talk about strategies to do that at another time. But there are other distressed situations, divorces, death in the family, all sorts of other life events that can take place that can necessitate the very quick disposal of that property for that person. And oftentimes that particular person will go ahead and make terms very comfortable for you in order to acquire that property. It's very often going to be owner financed. You can ask for what is called a contract for deed, and we've talked about that in prior videos, where basically you have a private mortgage between yourself and the owner of the property. You own the property, but legally, as far as taking money out and so on and so forth, it's still in the hands of the guy that has the deed until you refinance him out or pay him off. Lease purchase, that's another way of getting into the property. Or you could do a private equity position. For example, let's say it's a dilapidated house and you want to go in there and rehab it, and but you want some money, some help to rehab that money. You go ahead and you say, I'll do the work, I'll do all the maintenance and upkeep, and I'll do all the supplies and so on and so forth. I'll get the rehab loan, and I need you to take back 30% in terms of a private equity position. A lot of times that's going to be something that you're going to want to go ahead and do. So With that, let's take on to another one. Did you know that you could buy real estate with an IRA? If you have an IRA, the fact that self-directed IRA, you can buy real estate in that IRA. And many people do not realize this. And many retirees, when they get ready to retire after 30 years on a gold watch and a nice pension and their 401k, they need to roll their 401k into an IRA. And what they don't realize is that they don't have to go to Edward Jones and roll it into a portfolio of mutual funds. Folks, you can go ahead and find a self-directed IRA custodian that will allow you to make investments inside of not only real estate but all sorts of different assets that you probably have never even thought of before. For example, you can buy tax liens inside of IRAs. You can buy, you can make notes like we're talking about right now inside of IRAs. So those are just one thing that, just one idea there for you can use to help you as far as making investments in real estate without any of your own money. And finally, private equity participation. What does that mean? Well, let's say that you have a friend of yours that loves the idea of being a real estate investor, but does not want to swing a hammer and does not want to get involved in looking at houses and doing all the things that it takes in order to be a real estate investor. He just wants to have real estate investments. Okay? That particular person could go in with you as a private equity partner. So you find the property, let's say it's $100,000, and you are going to go ahead and get a loan for $60,000 for your side of it, but $40,000 of it is going, $40,000 of this of the $100,000 is going to come from your private equity partner. You now have a very bankable investment from the private money lenders or the hard money lenders, whatever the case may be. You have a very bankable investment for a fix and flip, and a very excellent opportunity for a large gain in that capacity. So, with that being said, I hope this gives you just an eye-opening, if you will, of why it is possible to buy real estate without any of your own money. And I hope you will come and visit with us and take a look at some future tapes sometime in the future. Take care. Bye-bye.